how easy and how fun. Wow. Don't look too excited, Tony. But you got it. I mean, this is easy. Brittany, how are you? Good. Now what? We got to do the sock and the shoe again. Have you already got it done? Yes. What is it? 835,000 what? Thank you. 835,000. And now what do we do? Tyler, he knows he's coming next.
Then we're going to follow the arrow down and put
Bingo.
$835,000 in cost of goods sold.
Absolutely. Absolutely. $835,000. And then now what do we do, Kylie?
Then we have to credit the $835,000.
Yes. Because we got to zero out this account. Cost of goods sold, like direct labor and like manufacturing overhead, is a expense account. And then we follow the arrow brick road again and put $835,000 in here. And Kristen, what is income? Where's Kristen Wiley? Kristen. There she is. What's income or loss? How much? $5,000 income or loss? Did you what you said $5,000 what? Debit or credit? Or what did it would be on debit side. So the expenses are bigger than the revenues? Huh? It looks right to me. I'm sorry? Well, what we're doing in the T account, when I draw that line across, we're finding the balance in the account. So which were bigger, the debits or the credits? The debits are bigger, so that's the expenses. The expenses are bigger than the revenues, and they're bigger by $5,000, so we actually have a $5,000 loss. Okay? So those all mean kind of the same thing. And I guess I fired about 4 different versions of that at you as questions, like one right after the other. Whew, are we now done? Don't pack up quite yet and kind of turn off your brains quite yet. But have we filled in all the numbers? I'm sorry?
The tone in your voice is no.
Well, we actually have finished all the numbers, although I really want to do that and say we're now really done. We actually are done with the numbers, but I want to take just the last couple of minutes of class and talk conceptually about why that cash account is on the board. Because I want you to realize you may or may not have figured this out in your last class. And that is, accounting is very logical. There's a beginning and an end. Which comes first? Spending money or receiving money? In a business, in the life of a business, which comes first? Spending or receiving? Spending money always comes first. And that's really kind of the order we encountered them too. We spend money. You really don't need much more than these accounts that are on the board to run a business. We spend money. This is what we spend it on: direct materials, direct labor, and selling and administrative expenses. These items roll through inventory. We sell them, or we recognize them here in cost of goods sold when they are sold and shipped. And then here we calculate a loss. And then we start all over again. We spend to receive, we spend to receive, we spend to receive. And it's very logical. This is particularly helpful for those of you who are accounting majors and going to be going on to much more difficult classes than this one. It's very helpful to have kind of a foundation, if you will, of these are the basics of journal entries, of how costs flow through an organization. And everything else becomes details. Okay? Very logical, beginning and an end. We'll see you on Thursday.